everyone, welcome back. Just a quick sound check and then we can get started. This is news trading session number 2. We're going to be talking about some theory and practice, and with what's going on, I think it's probably an example on what kind of news that we should be considering as well. All right. So this is audio seems to be good on my side, but let me know if there's any issues. We're going to start news trading session number 2. This is going to be your theories and practice. We're going to take some examples on the market in terms of how do we create the type of orders that we're going to be using for the NFP, the CPI, and all the other news. And that's basically what we're going to focus on tonight. All right, so my name is Vida in general. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be attentive when determining the volume of your transactions and consider all possible risk factors. All right. Bonus for participants, as per usual, we're going to get you the promo code to double your deposit bonus when you deposit into your trading account. You should also have access to the private Telegram channel if you register through email. You should be receiving this via email. All right, a little bit about myself. My name is Vito Njoro. I've been a full-time trader with more than 20 years of experience. I'm also a professional trading coach and technical analyst since 2007. I've worked with a lot of huge brokers out there in the past, and I'm an expert in the Ichimoku Kinko Hyo technique. I'm also a director at Zenifix, an independent market consulting company. I've also been a guest speaker at Trading Investing Expo in Australia, Invest Fair in Singapore, and the ATA and the APTA conferences, which is the Australian Technical Analysts Association and the Australian Professional Technical Analysts. All right. So we're going to talk about advantages and disadvantages of news trading, the most profitable news for trading, 3 main phases of price movement that we're going to take a look at, and we can show you that example later on. General rules for news trading, examples of pending orders. We're going to talk about the buy stop and the sell stop, as well as the buy limit and the sell limit strategies. We also will be taking a look about trading of the news releases as well. All right. So this is the code that you can use. It's non-farm 2023. This is to double your deposit bonus when you deposit into your Octa trading account. So feel free to use the code. I guess it's there. You might as well use it. It's non-farm 2023. Okay. All right, so let's talk about the advantages and disadvantages of news trading. I think the advantages for this one here is that all the necessary information can be found in the economic calendar, so there's no need to delve deeply into technical and fundamental analysis. When we talk about news trading, it's not the same as fundamental analysis. Right? When we talk about fundamental analysis, it means getting a much deeper depth into it, doing a little bit more analysis on it. When we talk about fundamental analysis, and if you're trading stocks, if you take a look at the company's profit and loss statement, that constitutes fundamental analysis. All right, so the valuation of a company, that is fundamental analysis. In Forex, when we look at the NFP releases, the CPI numbers, the GDP, the PMIs, those are considered fundamental analysis, but we are talking about news trading here, so we just want to take advantage of what's going on at that very moment during the news releases, and this is classified into a separate trading strategy. It is different from fundamental analysis. All right, so pretty much anyone can get started with news trading if you know the right strategies to use. Okay. Events in the calendars are ranked in order of importance, which helps in making adequate decisions. I can show it to you right now, and I'll use the economic calendar. Okay, so we can actually highlight and change the news here from, if I just want to see the important stuff, I'll look at the 3 stars, which is the high impact news. So we classify news by the impacts. It will be high, medium, and low impact news. So the high impact news are pretty much highlighted. For example, this week you can focus on the high impact news just by itself. On Tuesday, we got high impact news coming up from the Aussie. Australia this morning, and not much in terms of a high impact news for today. Tomorrow we have the US PPI, and on Thursday tomorrow we have the US PPI and the FOMC meeting minutes. On Thursday we have the US inflation number, and this is classified as high impact news. So you can actually filter it out, and if you really want to look at the medium impact ones, you can just select the medium one and find out that today medium impact news would be right about now President Lagarde is giving out a speech, and that could impact the euro. Okay, so we are going to classify them by how impactful they are to your trading. Publication of statistical reports noticeably increases volatility, allowing traders to potentially earn significant profits. You have to be quick, like the NFP last week. We get in, we get out. If we didn't get out, it would be a huge loss for us last week. So yeah, basically we just want to take advantage of the short-term volatility when the news get released. If it's above market expectation, or if it doesn't meet the market's expectation, it could create a little bit of volatility in the market, and the market will move very, very quickly, but for a very short period of time. This is the time when you want to be trading, and that's why we are going to be employing the pending order types, because sometimes we just can't get there manually in time. All right. The simplicity of a strategy, basically with this one here, you just have to know how to open and close the orders without the need to learn any complex formulas. So it's really automated in terms of trading. Right now, you can just buy and close it, or set up your stop loss and take profit targets. But we want to talk about the pending orders tonight. All right. Minimal time expenditure on trading. You know exactly when to access the trading platform and what actions to take. Moreover, the trading process itself can be completed in just a few minutes. You can review our previous CPIs and NFP trades. I think the record trade was the CPI about 2 months ago. It was 58 seconds. That's how long we opened the trade for, and that's how quickly we get out of that trade. It just takes a few minutes. Okay, but there are going to be disadvantages as well, because the market situation doesn't always develop as predicted by logical thinking and common sense. For example, last week's NFP, let me just give you an example. The NFP was good. It was double what the market was expecting, but it was really short-lived. I believe it's only about an hour where the market goes in that direction, and then it kind of reverses on itself because it's Friday. There's some profit taking. There's a long weekend coming out last week, so in the US, and people are just closing out the positions, just readjusting a lot of positions to price in the new NFP numbers. Okay, now, not all news can cause a significant market reaction. For example, tomorrow's PPI number might not have a much higher impact compared to the CPI number. So, even though they are considered inflation numbers, they might not cause a movement at all. The PMIs, both manufacturing and non-manufacturing PMIs, sometimes it does move the market, sometimes it doesn't move the market. So we need to kind of filter out what really moved the market. All I can say is there's probably 3 events that could move the market every month. It would be central bank meetings, right? Whether it's the FOMC, ECB, Bank of Japan, right? Or the Bank of Canada, or the RBA, or the Bank of England. It could move the market. The scheduled one that we know, the NFP numbers, which is published every first Friday of the month, that's going to move the market as well. The inflation number will always move the market, because the inflation number is basically correlated to what the central banks are going to be doing as well. Okay, but that's fundamental analysis. You don't need to know that deep to get into news trading, and that's basically the advantage that we want to emphasize for this webinar. Now, if you're unable to accurately guess the market direction or analyze the situation correctly, you may experience significant losses very, very quickly as well. So I would classify this as a disadvantage. News trading can be very profitable, but if you do it wrong, or you didn't plan out your trade properly, you didn't have any risk management, you don't have any risk control, it could spiral out of control really quickly as well. All right, so think about it. I would say news trading, it's very similar to how we use leverage in our trading. It's a double-edged sword. It could be beneficial for you, but if you didn't plan it well, it could be a disaster to your trading account. So just keep that in mind when it comes to news trading. It does come with a very high risk as well. Okay, but you can couple this with your knowledge about technical analysis. You can couple it with your knowledge about fundamental analysis, and that does help out with your news trading as well. Now, let's talk about the most profitable news for trading. So basically, all news is divided into two categories. Number one is hot or unexpected news, and this is basically what's going on in the world right now. Okay, if you don't live under the rock, you would know what happened over the weekend and what's currently developing, which is sad, but it is what it is, right? So these are unexpected news. It includes terrorist attack, military conflicts, which is what's going on right now, and natural disasters. And during such times, national currencies become much stronger as investors get rid of stocks which are about to fall. So that would apply to whatever the conflict is, or whatever the conflict is. But it does have some spillover effect as well. For example, if you're looking at a military conflict, there's a little bit of an unrest with what's going on in the Middle East right now. Okay, there could be a drive towards safe havens, right? There could be a drive towards gold, for example. Could be a drive towards US dollar. Could be a drive towards the Japanese yen. Now, I was actually discussing this on a webinar last night, whether or not the US dollar is actually going to be impacted. But from what we see in the past, what we saw in the past, Middle East conflict has a very unique development in the market. Typically, we don't actually look at safe havens running into the US dollar itself, but towards the US bonds, right? So bond prices goes up, the yield goes down, the US dollar actually doesn't go anywhere else. Okay, so I was actually discussing what we're going to be expecting for this one. Is it going to be a run towards US dollar, or is it going to be on the treasury side that's going to get boosted up? Okay. But yeah, whatever's going on right now is classified as unexpected news. No one planned it out. It just happened very quickly, and the situation is still developing. It's not under control. There's no diplomatic agreements or anything like that. It is as we saw it. It's currently still developing. So it's best to keep an ear out on what's going on, because it's going to have an impact onto the financial market and especially the currency market. Okay, and then we have the periodic news. This comes out regularly. Includes the following reports of the companies and everything related to them. So we have, if you're trading in the stock market, you might want to pay attention to the earning calls, for example. It does happen every quarter. Okay, and then we also look at central bank meetings and monetary policy decisions, because forex market reacts to them by raising and lowering rates. Quarterly GDP reports, those are the more important ones than the monthly ones, right? We are expecting a monthly GDP reports coming up from the UK, I believe, on Thursday. Inflation numbers. So we have the CPI on Thursday, the PPI tomorrow, and the core inflation on Thursday as well. Indices of business activity in manufacturing and services. I mentioned this just now. It's the ISM Manufacturing or the Purchasing Managers Index, or the PMI. And then we have the unemployment data, or the job numbers, which is what we get last week with the unemployment rate, as well as the non-farm payroll and JOLTS job opening numbers. Then we have the ADP numbers. And then every week we have the weekly unemployment claims from the US. Those are some example of what periodic news to expect. Okay. All right. So yeah, typically I don't have an example every month, but this month the situation just happened. We have an example of what's categorized as the unexpected news. It would fall under geopolitical risks. It is a military conflict, as we saw in the news right now. Okay, but that aside, typically the market has three main phases of price movement during news releases. So we have the accumulation phase. And basically, the most informed and forward-thinking insiders enter at the accumulation phase. Okay, and then we have the participation phase. Typically, it's technically driven, and also this usually happen after news releases. And then we have the distribution part. That's when everyone else look at what's going on in the market and say, you know what, I want a bit, I want a piece of that cake, right? So they jump in a little bit late. Look at the distribution number. The distribution phase is where majority of the public enters here by receiving outdated information. Okay, so let's say the news releases is now, and maybe the distribution phase happened, half an hour after the news release, or maybe an hour after the news releases. It is typically considered an outdated information, to a certain degree, where it's probably not an optimal entry price to get into that trade, after that news releases. Now, with the distribution phase, traders that were in the accumulation phase actually starts getting out at the distribution phase. Okay, so we have a very good reason why we stay in the trade for a few minutes at best, because typically with news releases like the NFP, it goes in one direction and then it reverses. Okay, and that's basically what we saw last week during the NFP news releases. So I'm actually just going to show it to you here. I think we actually still have some leftover markers on that as well. Okay, all right, so it's still here. I can show it to you. All right, so this is here, and that's basically when we actually traded. So I can go into the 15-minute time frame and go back to show you what happened. All right, so we got the news release pretty much here. So we got in a little bit late on this one here, because as you know, with any news releases, there's a little bit of a risk where the orders doesn't get filled immediately. So we had our sell stop over here, and then it got filled a little bit lower, but we got out immediately, not too long. So that's basically how we look at it, right? We don't want to stay in for too long, because if you had overstayed into your trade, it would actually go back and the market kind of reverses on itself. Okay, all right. So you need to know the phases. I'll show you an example later on when we talk about accumulation phase, where can we actually start, creating a little bit of a range for the market to trade, and awaiting that breakout. All right. So general rules for news trading is that you really want to study the market and analyze the dynamics of a currency pair. Ideally, if you're trading the news, you want to trade something that's related to that news. Okay. So, for example, the U.S. employment numbers, it impacts the U.S. dollar directly. So the dollar yen, the euro USD, the pound USD, the dollar Canadian, dollar Swiss, those are going to be impacted immediately. But the currency crosses like the euro AUD, euro CAD, pound AUD, pound yen, euro yen, they're not immediately impacted by that news releases. Okay, so every news from different countries will have a different impact. For example, the comments from Lagarde right about now, the speech that she's giving out, it's probably going to impact the euro a lot more than, let's say, the sterling. Okay, so you probably want to focus on the euro, on that news releases. And then we also have the news releases as being statistical, and as well as, I would say, qualitative. Speeches are going to be qualitative because we don't have a benchmark in terms of speeches. It can change. We don't have any predicted numbers or whatever. Okay, so we need to understand the kind of news that we're looking at as well. And if you can analyze the market before you actually trade the news, it will kind of give you a little bit of an insight of what to expect. Okay, and then you also want to assess the reaction of a currency pair to that news that was released. Sometimes we take a look at the CPI numbers. The numbers doesn't quite match. We have a drop in core inflation. We have an increase in headline inflation. Sometimes it could create a little bit of a turbulence in the market. So we really want to read out the news and say, look, it's not supposed to go in that direction. The data is kind of a mixed data. It's probably best to get out from that trade. So that kind of things that you need to assess following the initial reaction. Okay. Now, prepare for trading by marking relevant levels on the chart, and I'll show it to you later on how do we actually do that. But if you really want to have a good hands-on example, you can look at the previous NFP and CPI webinars that we've done, or you can also attend the live CPI trade that we are going to be doing on the 12th of October, which is in 2 days time on Thursday. Okay. You should also decide on your trading tactics or your trading strategy, including when to open and close that order. You need to choose an appropriate trading time frame as well, because if you're trading the news releases, there's no point looking at the weekly chart because it doesn't have an impact that far. Maybe even the daily doesn't have an impact because you need to make that quick decision. So news releases, typically you trade with the 5-minute time frame, 15-minute time frame, or max an hourly time frame. Okay. Determine the maximum risk for each order and consider stopping using stop loss and trading stops. Decide on the terms of the deal, whether it actually be a quick or a long-term trade. Do you want it to be in and out in the first 15 minutes? Yeah, typically that's what we do with the NFP and the CPI release. We'll try to get out in the first 15 minutes. Or do you want to actually trade the news and then you want to hold it for a swing positions? Maybe you want to hold it for a day or two. Okay, maybe situations like the inflation number, if it's really surprisingly good, then your trade could actually be a swing trade. But you need to understand, what do you want out of the market? Okay, because it doesn't work the same way. Because I could say, you know what, I just want to get in and have a quick short in the market because the initial market reaction was the market go down. But I know it shouldn't last that long, so I just want to take advantage of that short-term volatility. So I want to get in and I want to get out in the first 50 minutes. Okay, you need to decide on what you want to do with it. Okay, so you can't just flip-flop when it comes to news trading. You need to take this very seriously, because if you plan it wrong, as I said, it could be a disaster for your trading account. So think about it very, very carefully. Okay. All right. So there are basically going to be a lot of pending order types that we can talk about, but the basic one is that we want to have a look at the stop orders or the limit orders. So let's explain the buy stop first. So buy stops are order placed above the current market price, and you're expecting price to go up beyond that level. Okay, so it's more of a breakout. If you're expecting the resistance to be broken out, then you want to create a buy stop at that resistance or above that resistance. So if you step away from the computer and the market goes in that direction, you're not missing out. Okay, the sell stop is the other way. So if for the sell stop, the orders are actually placed below the current market price, and you expect price to continue to go down, breaking supports, and that's where you want to place your sell stop. So think about it this way. I know the naming dynamic, it's really confusing, but think about it. If you want to say, I'm going to do stop orders, basically, if you want price to go through a certain level in the market, that's when you use stop orders. Okay. The limit orders are the opposite. If you expect a resistance to hold as a strong resistance, you can then place a sell limit in which orders are actually placed above the current market price. But once it touches that resistance level, you expect it to turn around and go down. That's when you want to have that sell limit. The buy limit is the same thing. You want the support to hold. That's when you do the buy limit. Okay, so if you're expecting the support and resistance to break, use the stop orders. But if you expect the support and resistance to hold, then use the limit orders. I think that's the simplest explanation that I can give in terms of the pending orders. But we'll do some example and it'll probably make it a little bit clear. Okay, so in terms of buy stop and sell stop strategy, this is the strategy that we actually employ every NFP and every CPI. Okay, So we basically have a corridor of volatility, and we basically want to create a range. As simple as that. Okay, so once we determine the range, we can create a buy stop or a sell stop. In this example here, I have two orders. At all times, I'll have two orders because during news releases, we don't know what the initial market reaction is, right? Even though we have some assumptions on how market could react, sometimes it becomes unpredictable as well. Okay, so you really want to have two orders during news trading. So you want to have a buy stop above the current range and a sell stop below the current range. What happened is, if the buy stop has been triggered, you basically have a long position. You need to immediately cancel the other position that you have as a pending order. Okay, so in this case, you got a buy stop. It kind of triggers the buy order. So you are actually long in this position. Okay, and this falls into the development phase. You can see the market rally up. You have your stop losses, you have your take profit level, and once it starts, getting further away, it starts becoming more profitable, you can actually move your stop loss to break even. You can actually move it to your entry price, where if the market reverses, you are safe. And this is a strategy that we employed last week. When we ended the webinar last week, market was still going in one direction, but we moved our stop loss to break even. And a good thing that we did it, because the market reverses after the initial reaction, and a lot of the position got stopped out pretty much at zero if you didn't get out. Okay, but that's how we look at it. Okay, so you got your consolidation phase or your accumulation phase, then we have the development phase, which is where market starts running up. This is where we have the distribution and it's not accumulation, I forgot what it is, it's the other one, development. Okay, so we are in that phase where we see that breakout happen, and some traders that open a position during the accumulation phase, which is what we are doing in this example here. We basically have our orders before the run up, and during the run up we got out of the position if it's profitable. Okay, cool. So let's practice, and I've got a chart here. We can use a few things. I'm actually very keen on let me see if I have, let me bring it up. Okay, so I've got a very good interest in oil right now, because oil prices has been flat following the open yesterday. So we basically have a gap in the market, and you can see the gap there. It's pretty huge in terms of the gap there. We still have a gap, and what we can look from price is that price is currently stabilizing itself. It's not actually trying to close below the gap. So we are currently in an accumulation phase, because we technically can square it off, right? And you can see the box here. It's very similar to what the example that we have here. Okay, we actually have a market that is in a flat market condition and in a sideways range. Considering the geopolitical risk that we have right now, oil is currently expected to be the most impacted, depending on how the situation develops. Okay, so everyone is kind of on standby at this point in time. Maybe I'll talk a little bit more about what the market is expecting. So if you are, updating yourself to what's going on, there are concerns if somehow there's evidence that points to Iran doing a proxy war via Hamas and Hezbollah. Things could get really ugly. It wouldn't be contained in the current zone. It would spread out, right? And this is what oil traders are currently keeping an eye out for. Everyone is pretty much on the edge. Everyone is on standby. Okay, so this is a very good example of an accumulation phase, because we know there's a range that we can use to trade the market. So we have a resistance pretty much at 86. In terms of support, we have about 83. 83.50, yeah. If you adjust it a little bit higher, it'll be about 83.50 if you want to round it out into a psychological level, for example. Okay, so let me change. I'll move away the box because we don't need it now. But we do have that range that we can see on oil at this point in time. So what market is expecting right now, and this wouldn't be a kind of a short-term, really short-term news trading. Oil doesn't work like that. Once it breaks out, it will typically take a longer period of time to continue in that direction. So there's a lot of concern and there's a lot of talks about oil at this point in time. This is probably the asset that a lot of traders are most concerned about. It could really spiral out of control. Now, because we are in that accumulation phase and the market is trading in a sideways market condition, it is technically sideways because I can show you a triangle is actually forming a symmetrical triangle at this point in time. Yeah, you can see that support building up, and you also at the same time you also see a resistance coming down as well. So technically, the way you want to look at it, you can call this a symmetrical triangle, which has a lot of neutrality. And you know, we could be at that turning point as well. We could actually see the market turn around in October. So we'll see what's going on with oil at this point in time. It's going to be tough to make a decision if I want to trade this right now, but I can show you an example. If I'm looking at this, and I know I'm looking at the hourly time frame, so it'll take time to develop. It might take maybe 24 hours or maybe 48 hours to develop, depending on how the situation continues. But this is a very good example of an accumulation phase, because right now, if it does break 86, then I want to have a buy order, right? I want to have a buy stop above that 86 level, and I want to have a sell stop below that 83.50 level. Okay, so I can have that order level, and this is going to get placed here, and then you can adjust it. Once that order has been placed, I can make adjustments because I might be away tomorrow. You know, I might not be in front of the computer tomorrow. So if the market goes to 86.30, my order is going to get filled, and I can actually plan it out. I can modify my order. I can have my stop loss at, you know, maybe at 83.50. Yeah, the opposite side. So I can go for my take profit. Let's say I want to go for $95. So I can place that, and there's going to be a stop loss order as well as a take profit order over there up top. Okay, the other one is true. Maybe I want to have my stop loss at 86, yeah, and then I want to have my take profit. Maybe I'm looking at a return towards $80, for example. So I can adjust it, and I can wait until the orders are triggered, and we are good to go. Now, what if we're looking at it from a shorter term time frame? Maybe the Euro USD on the 5-minute time frame. So we probably have an example here. Okay, how about we look at this current range right now, and this one here, just right around there. So I want to create a buy order just slightly up there, and I want to have my sell order here. So I don't know what's going on. If it hits the buy stop, then I'll need to cancel the sell stop. This is just an example to just jump in blindly. The oil one, that's not an example. The oil one is a proper analysis. But on the Euro USD here, we're just looking at a little bit of an example that we have our buy stop and our sell stop orders, and we're just waiting for it to be triggered by the market. Okay, maybe we can look at the Euro Yen. The Euro Yen is actually very interesting because I can see very quickly here there's a little bit of a range here developing. Maybe I'll have my stop loss at 157.50. I'll have my buy stop at about 158, right? Just likely above the range that we saw here. Okay, so we're looking at a buy stop above the current range, a sell stop below the current range. Okay. All right. For gold, is it gonna go up? Is it gonna go down? I think there's a little bit of a resistance. We talk about this on the Outlook, and if you haven't watched the Outlook, it gets published every Monday. We were looking at a potential return towards 1875 for gold. But yeah, looking at the current situation, what are we going to be doing for gold? Is there a range that's being established here that we can actually use to trade? Yeah, I think we can actually place a buy stop up there about 1865, maybe a sell stop lower than yesterday's range, about 1845. You can place those orders, right? This would apply onto the 15-minute time frame and even on the hourly time frame. We're basically placing our orders above the current range. Okay. All right. So nothing has been triggered yet, but that's how we place the buy stop. So for now, I'm expecting, price. If price goes up above a certain range, then I want to be in a buy position. Then that's where we use the buy stop order. And for sell stop, if we expect a support to be broken, then that's when we are going to be using the sell stop order. Okay. All right. The other one is a limit order. So if you take a look at the limit orders here, we look at the market. That's a little bit of resistance building up, right? You see the red zone there. That's a resistance building up in the market. And maybe I have a strategy. Maybe I have a view where I expect if price goes up to that level, it could fail at that resistance level. So I really want to have a sell limit order somewhere around that red zone, right? The resistance zone. So that's when we use the sell limit order. When we expect the market to go up, but not able to break the resistance and fall back down once price touches that red zone, that's when we want to have our sell limit order. Okay, so in this example here, the market goes up to that red zone, trigger it, and then immediately comes back down. Okay, that's when we want to use a limit order. I'll show you an example on how we can actually use that as well. All right, so let's practice again. I'll probably use maybe oil on a small time frame. Yeah. So on the 15-minute time frame, I don't expect oil to go down. For example, I don't expect oil to go down anymore. So I want to cancel my stop orders. I want to cancel my stop orders right now. And sorry, I canceled the wrong thing. So oil, I want to cancel my stop orders. Now what I expect is, I'm expecting oil prices to be affected by what's going on. Okay. Maybe if that's my view, then if market goes down, let me just give you an illustration. If market goes down, okay, and then I expect this to go up, then I want to have a buy limit order around that level. So I can create that buy limit order. So it's a different order. All right, so one order just got triggered. So let's go into the Euro USD. I got one order. I got a sell stop triggered. And already sell stop? No. I got a buy stop triggered. The sell stop that I have here, I want to cancel it. Okay. Now I only have one trade at this point in time. And I want to adjust my stop loss. Maybe just, slightly lower than the current range. In terms of take profit level, I'm going to be looking at about 1.06, yeah, about 1-to-1 risk reward ratio. So that's how we do it in terms of stop orders. Yeah, I was talking about other stuff. I wasn't looking at Euro USD, but price touches that level and then it just opens a buy stop for me. So I'm in that trade right now, but I wasn't looking at it manually, right? So for this one here, we've got a sell limit, so a buy limit. I mean, if price goes down, it will also create a buy order. So I've got a buy limit and a buy stop. Basically, I'm looking at oil going up, right? If it breaks above 86, I'll be in a long trade. If it comes back to 83.50, I expect support to actually hold at 83.50, and price could pick up after that. So that's the difference between the buy stop and the sell stop. The example on the Euro USD that was triggered just now, that was a buy stop. But we are looking at the 5-minute time frame. It's purely as an example. Do not just blindly jump in and open the position. Okay. All right. Any questions regarding the order types? I'll have a look at gold once we go through this, but the point for this webinar is it's not a live trading session. It's not a live market outlook. we want to talk about the order types. We want to talk about news trading. We really want to drill you in so that you are actually prepared for our future NFP and CPI sessions. Okay? Any questions so far regarding the order types? Okay, well, I'll go through the questions. Tell me about the wave. I think there's a separate webinar for wave counts. No questions so far regarding the order types. Okay, we'll go back to the slide then. Okay, so we can also trade after the news releases as well, and this is when you can actually employ limit trades, limit orders, and stop orders as well. So let me just load up my trading view so I can go back in time and show you what happened during the NFP release. Okay. Right. So let's say we have the Euro USD. Let me clear out a lot of this stuff. And I want to go back to last week on Friday at about the news release, right before the news release. So I'm going to be here. Okay. So this is probably the best way to look at it. I'm going to hide the Ichimoku and the sessions. So for the Euro USD before the news releases, we do have a little bit of a range, right? We basically have this and that as our range. So I could create a long position if it does break that level, and my stop loss would be there. And maybe I'll target a little bit higher, maybe 1.06. Okay. Or I could create a short position if it does break the other side, and that's my stop loss. Maybe I'll target something about the support about 1.0550. Maybe we can go not 1.0550, maybe a little bit lower, 1.0535. Okay, so we'll see what happens here. What gets triggered if we go by the news trade. Okay, the market starts coming down and then it breaks. So the order is pretty much immediately filled and take profit because we're looking at this as a potential support. We got filled and out pretty much at the same time. So once that's filled, we can close this one. So we already got one trade down. That's great. Now, all of a sudden, we're looking at a potential floor, maybe about 1.05, okay, on the Euro USD. So we could say, okay, price is now about 1.05. This is after the initial release in the market. You know, maybe we can attempt to go long Euro USD because it's close to a psychological support level, 1.05. Maybe I'll have my stop loss a little bit lower, about 1.0475. And you know what? Maybe I'll target a potential move towards 1.06. Because if we measure the drop with Fibonacci, you can actually get your projections, which is about, you can go for 161.8%. So we'll see what happens. This is currently after the news, right? The news got released, and this is the initial market reaction. Now, I'm out of that sell trade, which is done here, and I'm in a buy trade right now. Okay, it's holding on, didn't hit my stop loss. All right, starting to pick up. That's what happens. Okay, and the market does pick it up. So we don't actually have to trade during news releases. We can take time and analyze. Oh yeah, you know what? We got support at 1.05. It's a strong psychological support level. And we have a projected target maybe at 161.8%, which is at about 1.06, 1.0610, right? At this point in time, you can then move your stop loss to break even. If it happens, it'll hit the target. If it reverses back down, then you know you're not losing anything. So we'll see what happens. And market developed. This is already on Monday. So far, it's dropping down. It's starting to pick up again, but still in sorry. Oops. Right, still in that trade. Okay. So there we go. It hits our target after 2 days, right? But we can make projections. If we understand technical analysis and fundamental analysis, you can make your projections or you can make your analysis after the trade, after the news is released. Okay, so news trading doesn't require that skill for your technical analysis to kick in or your fundamental analysis to kick in. You basically trade during the news. You make sure you get in and you get out really quickly. Like the first trade, we only have kind of limited range. We can't really project anything because everything moves very, very quickly. There's a lot of high volatility in the market and lower liquidity as well. So, but if you don't like trading the news, you can analyze it after the news gets released. You can use your technical analysis and you can figure it out. There's a potential floor at 1.05 on the Euro USD. Okay, and then we have a projected, Fibonacci extension towards 161.8%, slightly above 1.06. So you have your targets that you can actually deploy following the news releases. Okay. Okay. What is a buy stop limit order on MT5? And let's go back again. Okay, so the buy stop and the limit order, buy stops are orders placed above the current market price and you expect price to continue to go up. That's when we create a buy stop. A sell stop is if you expect price to continue going down and breaks below that certain range, then you want to have a sell stop. So basically, buy stop, if you expect the resistance to be broken, you want to have a buy stop. Sell stop, if you expect the resistance to be broken, then you create a sell stop. Okay, so let's go back to the example. So we have a buy stop on the Euro USD that was triggered, right? But that was just an example. So let's take a look at the Euro Yen, for example. So this is currently in range. And this is a proper analysis, by the way. The buy stop there is actually a very important level as well because it will actually kind of fill in the gap that was established on Monday as well. Okay, so this, is there a fill on this? Okay, so if I expect there's a little bit of a resistance up there, right? It's about 158. So if I expect, I'll just write it down. 158 to be broken and price could continue to go up, I will place a buy stop at the upper range. Okay, so if I expect 158 to be broken and price could continue to go up, I would create a buy stop up there. Obviously it doesn't fill in enough, but yeah, if I expect 158 to be broken and price could continue to go up, then I want to have a buy stop. Okay, so that's a buy stop. If I expect price to continue going up, then I want to have a buy stop. Okay, so if I, on the other hand, expect price to go down below support level, then I want to have a buy stop, a sell stop. So let me just write it down. If expect price below 157.50, sell stop. Okay, because I expect market to go down. Okay, simple as that. So this is the sell stop and the buy stop. If I expect the market to go down, then I want to have a sell stop. When you use pending order with stop loss and take profit, is that calculated to the money deposit? When you use the pending order with stop loss and take profit, is that calculated to the money deposit? It would depend on your trading positions, right? I don't know what the equity is, but if you're using MT4 or you're using MT5, there's a shortcut. It's called Alt T, right? So if you have your Alt T and you adjust your position here, maybe I want to go for 0.1, just for future reference. And if I create a sell stop now, it will be at 0.1. Maybe you can't see it over there, but there we go. So the sell stop is now 0.1 lot. Okay, but if I change this to, let's say I'll go crazy, I want to have a 10 lot, then it will be 10 lot. Okay, so you can actually make adjustments here. Or there's a more complicated way to place the pending orders. You can create a new order here. You can place a new order. Then in terms of market execution, means you're buying at market price. You can do your pending orders. Then the type of the orders itself. Okay, there's even a buy stop limit, buy sell stop limit. That's basically stop losses and stuff. So I can do it manually as well. So let's say I want to have a sell stop at 157.49, right? Lower than 157.50. Then I can adjust my stop loss as well. Let's say I'll have my stop loss at maybe 158. You can also adjust your volume. This is where your lot size is. Okay, so make sure you're adjusting it. But you can. This is the more complicated way of doing it. So I much prefer to use the Alt T, adjust the lot size there, and then just do it automatically. But if you really want to create an order and you can spend time doing it, that's fine. You can use the pending order as well. But this is where you can actually adjust your volume size. Maybe you can have it at 0.01. Yeah, maybe I'll place it at 0.01. Sell limit, if price, sell stop, if price goes down below 157.50, right? So I can place that. That's how we do it. Okay? All right. Cool. That's sell stop, and the buy limit is the opposite. Okay, maybe I'll use a different one. Maybe sterling yen. Okay, let's take a look at the sterling yen. What can we pick up from the sterling yen? Do I anticipate a little bit of support? Maybe on sterling yen, I'm looking at about 182.25. Maybe a little bit lower. I'll go for about 182.20. Right, about 182.20. I expect price to not be able to break the support. I expect price to potentially bounce off that 182.20. Okay. Oh, the Euro USD is nearly done. So yeah. So maybe on this one here, I expect price to kind of bounce a little bit around 182. So I can create a new pending order, right? I don't want market execution. I want a pending order, and I want to create a buy limit. And maybe I'll go in for one lot. Price is at 182.20. And in terms of stop loss, maybe I'll have it at 182. Take profit. I expect this to go up a little bit higher. Maybe I'll go for 183. Okay. So I'll place it. And this will become a buy limit. So if price goes down, to take out 182.20, it will create a buy order instead of a sell order because I expect price to bounce up a little bit. Okay? Okay, cool. So that's the difference between the sell stop and the buy limits. Okay? You can screenshot this. I think this is a very good shortcut. And I know for a lot of new traders, it gets really confusing. It takes me a long time when I first started trading to understand the stop orders or the limit orders because I kind of get it mixed up all the time, and that's probably kind of a weakness because I was so confused. I don't like learning, and back then we don't have a lot of education as well. So we kind of have to figure it ourselves, or if we're lucky, we get to meet up with a superb traders that could become our mentors. But that's how we do it 20 years ago. That's internet wise, there's not a lot of information, and everyone is still kind of learning the steps in terms of online trading. The pending orders, we don't actually come from if you don't work in a trading firm, or you don't work in an investment side, if you're not a trader, you probably don't understand all this jargon as well. So the easiest explanation I can give you, if you expect a resistance to be broken, do a buy stop. If you expect a support to be broken, do a sell stop. If you expect that resistance to hold and will stop price from going higher, do a sell limit. Okay, if you expect support level to hold as a floor in the market and you expect price to bounce off that support, use a buy limit. Okay. What's the difference between a buy stop limit, sell stop, and sell stop limits? Look, let's just focus on the buy stop, sell stop, sell limit, and the buy limit first. Okay, you can do the buy stops. You can do the buy stop limit. That's more on placing stop losses as well. So just focus on this 4 first. I know there's other order types, right? The MetaTrader, I believe there's 6 different pending order types, but focus on this 4 first. Don't get yourself confused, okay? You don't use the other one very often, and it's only used in a very special case, okay? So just focus on this one first. All right. So let's do a quick test, and hopefully you guys can participate on this one here, and we'll answer all the question on the RSI. But if you guys can answer this for me as well. All news can be divided into 2 categories. What are they? Okay. And what are the type of orders most often used in news trading? What types of pending orders do you know that you can probably learn from this session? And when should each type be used in trading? I just gave it out as well. So if you guys can answer this for me, well, I'll explain a little bit about the RSI. Is RSI better compared to what? Compared to stochastics? Compared to MACD? RSI has its advantages. Stochastics has its advantages. I wouldn't say one is better than the other. I think they complement each other if you understand how to look at those tools properly. Do I have a preference between the stochastics or the RSI? Really depends. If the market is trending, I prefer my RSI. If the market is a little bit choppy, I'll prefer my stochastics. All right. Okay. Thanks, Albert. So all these can be divided into 2 categories. What are they? They are periodic and hot. Periodic are scheduled news releases. Hot news are, it's unfortunate, but what's going on right now is an example of an unexpected news. There's a military conflict. There's a geopolitical tension developing in the Middle East right now. That's considered unexpected news. Okay, so yeah, news can be divided into 2 categories, and that would be periodic, scheduled news, and the unexpected news releases. All right, I'll help out answer this. What type of orders is most often used in news trading? We typically use the stop orders and the limit orders. What type of pending orders do you know? You should know about the stop orders and the limit orders by now. And when should each type be used in trading? If you expect support and resistance to be broken, use the stop orders. If you expect price to hold that resistance and support, use the limit orders. Okay, cool. All right, so this is the code again. If you want to use the code as non-farm 2023, this is to double your deposit bonus. If you're depositing into your Octa trading account, feel free to use the code. Might as well use it. It's there. No harm done, right? It's to double your deposit bonus, so you can use that bonus advantage. But there are terms and conditions. If you are not quite sure, please ask the Octa support team. Okay. All right, so I don't think there's a lot of questions. I think a lot of the questions has been answered. So what's next? We've got news trading on the inflation or the CPI. This is going to be on Thursday, on the 12th of October. We're going to talk about definition of what the inflation rate is, what we're looking for in terms of the CPI. Why is the core CPI different from the headline CPI, for example? And then we are going to be trading live on Thursday during the CPI news releases, so you can actually learn to deploy what you use. To use and deploy what you learn from this webinar. Okay, cool. That's pretty much it for tonight. So I look forward to seeing you guys again on the 12th, which is in 2 days' time, on Thursday, when we are actually going to be trading the CPI live. So you don't actually want to miss that out. All right, cool. With that, good luck with your trades, and I'll see you in 2 days' time.